to us about this wave of earnings that we're yet to see and what it could mean for the market. Because, for example, Amazon, strong rally this year. It has not yet reclaimed its high, but we're sitting on some fragile footing here in the market.
So Amazon, we think, is actually one of the most interesting of the mega caps. Most potential for what we would call a re-rating upward, in particular because their retail business we think is going to become profitable and show expanding margins. And that is the debate around the company. The retail business there has basically been unprofitable, and in particular, very much subsidized by advertising, and then during COVID, very much burdened by the build out in infrastructure. But we think they're about to turn the corner on that, and generally constructive on Amazon over the longer term. In terms of tonight's earnings report, a lot of their earnings reports recently have been fine, but met with sort of disappointed expectations. And that's the sentiment part of the stock market. We don't really try to predict that short term.
What about Apple? Because they have seen a broader rise here. Do you expect them to continue this rally given where we are in price to earnings multiples?
So Apple's a little different. I mean, it's actually pretty slow growth going at Apple, but it's also very steady growth. And we kind of think of Apple as sort of like a consumer staple almost. They do have opportunities, and Apple's opportunities are very large. Obviously, they dominate the tech industry with the iPhone and the iMac and the collection of technologies. Services is much faster growing than hardware. We think the weakness in hardware, iPhones in particular, has been well telegraphed. And so I think, again, actually, Amazon, in Apple's case, actually, there is a little bit of a margin story there. They had a lot of headwinds during COVID. Extra costs for components, extra costs for shipping and logistics. We actually think they could surprise on the margins tonight. And revenue is probably just in line. Valuation, tough to say. We think it's sort of fairly valued.
Dan, talk to us about the meaning of big tech for this market. What else are the areas that you're excited about outside of those kind of big 4 or 5 names?
Well, I think, first of all, the market has been up 6 out of the last 7 months. So a pullback here is natural. We are growth stock investors, bottoms-up oriented, and we actually think it's increasingly clear that the economy is not going into any kind of severe recession. And in fact, it's a soft landing. And in particular, we think what will lead in maybe slower growth period that we're seeing, we are seeing some mixed reports around earnings, but slower growth will be secularly driven growth companies. And so technology, artificial intelligence is the big buzz, but it's real, and there's going to be a lot of investment around that. E-commerce continues and evolves. Digital advertising and social media continue to evolve. Healthcare, personalized medicine, and technologies around that. So we think there's a lot of growth trends, actually, that have continued through this period and will continue in the years to come, and that's where you want to put your money.
I know you're into NVIDIA, but what about the rest of AI? Do you think the market is following AI names a little bit too aggressively right now, still in bubble territory in some areas? Do you even go short in some of the AI?
We absolutely do go short some of the areas. I think AI, of course, has lifted a lot of stocks within technology and software and e-commerce. Who will actually be the real winners and when remains to be seen. When is an important note. I mean, there's going to be a lot of investment in building out the infrastructure to support AI activities and AI-driven products. Microsoft, NVIDIA will be winners in this. We think NVIDIA is going to be a near-term winner because their computing chips are the core foundation for AI. Other companies are probably going to benefit later. Other companies like, for example, Amazon and Apple, which haven't really laid out AI strategies, but have the technology, the customer base, the data about consumers, and a lot of things they could do both inside their business and outside it to improve using AI.
You also mentioned kind of this August pullback, weakness in the market, but
right.
There are some catalysts ahead. We had an investor yesterday mention, for example, the October budget discussions in Washington. That could be a potential headwind, real headwind to markets come October. Are you prepared for any further pullbacks in the market, and how would you play those?
Well, given the market run that it's had, we do think this pullback could be a little bit nasty. There are some indicators that suggest a 5 to 7% pullback would not be unusual. It could take 1 to 2 months. It could take a little longer. I happen to bet that it'll be shorter, mostly because I think the tailwinds to growth are still quite strong in the
Where
world.
are you most bearish with that view?
Well, we're still bearish on things like real estate, in particular valuations around real estate that got driven up so much over the last 5 to 7 years with falling interest rates. We don't think they've adjusted and corrected for the new interest rate environment. Secondly, you have to look at the derivatives of real estate, so construction, suppliers to it, and actually the big suppliers to the real estate industry are the banks. We're pretty negative on banks that were, say, lending too much to commercial real estate as well as homes at inflated values, and think they're going to have a difficult time sort of readjusting their balance sheets to the new realities.